It's Market Day Report. We love to talk the markets, and we're going to start by looking at the corn market and how we're trading on the heels of this prospective plantings report, which came out yesterday from USDA. All right, so how are we trading the corn market? Well, let's look. 5 3/4 higher on the May at 463. New crop 447. That's a shiny nickel higher on the trade. Soybeans, November at 1026. That's up 6 3/4 cents and trading within a penny of the day's high. Touch on soy meal. Meal has been in the red, well, nearly the entire, well, it has been in the red the entire year. Down 7.9% here in 2025. But just the opposite side of that, up 13.2% for soy oil this year, and all contracts are in positive territory. Over to the wheat market and July Chicago, 554 3/4. That's 4 1/4 higher. For hard red, July new crop up 3, 573 a bushel. Look at the trade range on that July, between 563.5 and 574 3/4. So an 11-cent trading range on July hard red. Now to spring wheat, December at 639.5. That's up 2.5. Trading range there is 8 cents. Looks like we're starting to bring some movement back into the markets after a week of quiet trade. 70.42 on December cotton. That's up a half penny. And 4 ticks off the day's high. Chris Swift is with Swift Trading, joins us in studio. Prospective plantings report out yesterday. The corn number, 95.3, that's up 5.2%, while soybeans down 4%. 83.49. Thoughts?
Well, it's a lot of corn, that's for sure. But when we looked at the very initial market movement, we saw corn go down and beans go up because you're going to plant fewer acres on it. But when the stocks came out, we noticed that the stocks in the soybeans a little bit higher, but quite a bit lower in the corn. And I think that maybe the bullishness is that we've got a little bit more corn demand out there. We're burning through a few more bushels than maybe what we thought we were. And so leaving out now towards the September-October timeframe, when we get ready for our new crop, we could possibly be right at 3 billion bushel or maybe even under. And I think under 3 billion would be quite a bit friendly towards the corn market right now.
And, you know, we look at where the corn market is trading right now. Obviously, we'd like to see maybe another dollar added to that. But is this something that can sustain buying interest while at the same time offering producers at least the chance to possibly pencil a profit?
Yeah, it's going to take a while to get that profit mark in there until we get a little bit higher on it. But I think there's all kinds of opportunity to the upside. To the downside, again, we have this demand, this underlying demand for it. So even if it does trade lower, we've already seen it try to trade lower multiple times and just can't seem to ever take out the new lows or even reach down quite to those levels. So I think, again, you've got that support of the underlying corn market right there. And then more than likely, as we get into the planting, that 95 million acres, there's about 1 million acres missing out of there somewhere or another. And does corn get that or does beans get that? But a lot of it will depend on the rain and the moisture. And here in the southeast, we are fixing to get inundated with the amount of moisture. So we're going to be another 3 weeks away from planting, even though we're going to get the temperatures that'll be just right.
All right, Chris, when we come back, 222. That's our number,
Okay.
222.
222.
What's that mean? Well, hang on. We're going to take a break. We'll be back with more Market Day Report right after this. When we look at the cattle market, we're talking about live and feeder cattle, but we're talking about markets that have gained over 7% so far here in 2025. Not only 7% here in the year, but we're in positive territory for the past 30 days. Let's look at live cattle to start with. April contract down 22 at 207.57, but still right in the middle of that trading range for the day. June contract is also lower, but a quarter higher on the August at $200.27 a hundredweight. Now to the feeders. Feeders have been up 3.8% this month. April at 287.05, that's 60 higher, and even 285 on the May contract, that's up 50 cents. And then to the hog market, hogs have been up 7.9%, so outperforming, technically, I guess you could say, the cattle market. Front month, April up, now unchanged at 87.72. Most active is June, 95.62. It's up 35. Before we went to break, I mentioned 222. That was the price paid for some cattle in Iowa, cash cattle last week. Not real representative, though, of the entire market, was it?
No, it's really not. And we're getting into some big discrepancies between reality and expectation. And the reality is we're very short of inventory, and people are having to pay this price if they want to continue to be in the business. The expectation is through the futures market, we're seeing things out there that might not be as conducive towards consumer beef demand. We know that the beef product is being manipulated greatly by killing fewer cattle, putting less supply out there, and that's really raised the price up. And we're hearing things that are saying it's beginning to impact the consumer. And then outside market forces, which have a lot to dictate and influence the commodity markets there, they're kind of the same way. They look at it and say, yes, we understand the cattleman. If he's going to be in the cattle business, he's got to pay that price, but we don't have to. And so that's where I think the division comes in. Today, we got to know CME's raising the margin requirements on the live cattle market. We've also heard some very interesting news about an AI development in the cattle market. So maybe take a quick view on the internet today and look for AI Beef LLC. And very interesting what some of these things that are coming out that we have thought all along in the background that was taking place. Well, now it's starting to come out as evidence.
Okay, so you said AI and you said livestock. Are we talking artificial intelligence
in the livestock market? So
okay.
I'm not familiar enough with it to spew it all out, but I was able to read it, and it was public knowledge. It was on a public website that I saw it, so I'm not spilling any beans. But I really do think it's going to be important going forward to see how much the corporate side of the industry, the food processing or production industry, is getting into the markets to try to figure out how can we vertically integrate and control our supply chain better than what we are.
Great points. Always great to see you. You've got to come back and see us again.
I'll do it. Maybe Thursday or Friday.
Okay. I'm marking it on the calendar right now. Chris
Good
Swift is with Swift Trading. That's how we start our trading day.
All right. Thank you guys for that update.